My name is Nick B, and let's get into this week's futures overview. So, starting with the Forex economic calendar, Tuesday we have consumer confidence at 10 a.m. EST. Wednesday, nothing's going on. Thursday, we have preliminary GDP at 8:30 a.m. along with unemployment claims. We have pending home sales at 10 a.m. as well. And then the main contender, the main catalyst for me this week is going to be core PCE price index on Friday, which is at 8:30 a.m. EST. Okay, so we may get some volume. Let's take a look at it. Starting with ES, let me clear all this hoopla. All right, wonderful. Okay, so let's start with what we know, kind of what's happening. And on the other side of things, let me expand this a little bit. I just want to go over specifically what happened back in November of 2023. It was right here, right here. And I'll point this out just for a few seconds and we'll move on to the current price action. But I find it peculiar where we made that top where we were right at the previous lower highs. We could not get above it. So trend short term began to reverse. We blew out two previous higher lows and started to pull back until we found a floor over at 41.20 basically. So the range ended up going from 41.20 all the way up to 46.30, where if we got above 46.30, we were going to continue up higher towards the next lower highs in that case, and that would be 48.68, or we would end up flushing below 41.20 and spill over. We flawlessly made it out of that bottom, flawlessly got above the first lower high. The second one confirmed that the trend is going to be bullish, got above the high of 46.30, and we kind of just never looked back. The only difference here is we don't have a lower high to go off of for previous price action. We're kind of just basically about to break out. So with that said, let me go back to the daily and let's chop it down to the 2-year. Let me get rid of these levels here because they're going to be irrelevant. We want to look at what's going on now. And as always, let's start off with plotting off the floor where we know the high is at 53.68 and we know the low is going to be at 49.63. What that tells me is either above 53.68 we're going to go higher, or below 49.63 we're going to go lower. Okay, just for illustration purposes, because of the strength of these support and resistance levels, I'm going to change the color to yellow. Okay, now there's nothing up here that can tell me where we're going to go, why we're going to go. So this is where I'm going to apply that round number theory. And again, above 53.68, considering ES likes to move in 20-point intervals during the day, intraday, I would assume 53.68, 53.70, add 20 to it. That's going to be roughly the area of 53.90. That's going to be the next target. Ironically, it comes up coincidentally next to a psychological round number of 5400. So right away my assumption is if we can get and hold above 53.68, I have the right to target 5400 with no issues, and a slight stop below what our previous resistance was. Again, as long as it holds. We're going to have to break this down now to the 4-hour because that's the only thing I can find from here. I did see Friday we had a really nice dip down to 52.72. My 20-day EMA, let's point that out, is going to be 52.65. So if we want this top to play out, if we want this to reverse, I need the daily candle to close below my 20-day EMA, which is at 52.65. Get me a close below 52.65. I can easily, with my eyes closed, target the next higher low, the previous higher low, to the downside, and that would be 52.18 for me. 52.18, 52.20, ironically also was a previous resistance level for us that we had to break out to continue higher. So that makes sense right now. That makes sense that this would be the target to the downside, 52.18, 5200 possibly, but only if and only if I see the daily candle close below my 20-day EMA, 52.65. Okay, with that in mind, I'm going to leave this alone for now, and I'm going to break this down to the 4-hour to get a closer look. All right. Okay. All of this we made up for, these lower highs, so they serve us zero purpose. No purpose at all. Our focus should be, well, my focus is now on the higher highs, higher low, higher high, higher low, higher high, higher low. Okay, sweet. Just like we identify the floor on the higher time frame, we're going to do the same thing here on the 4 hour for the intraday. So let's go ahead, and right away what stands out to me is, well, first of all, 1 second. Let me adjust this 53.68.25. I have it has to add up. 53.68.25. Okay. All right. So again, what do we know? For certain, above 53.68, we're going higher, and the assumption is as long as we can hold that as support, we're going to 5400. That's going to be our upside target. Okay, noted. Now, I'm going to ignore the 20-day temporarily. The 20-day on the 4 hour is 53.22, and the reason I say this is because before I look at indicators, I need to know what floor and what is price action doing. So I'm going to go ahead and mark off this wick right here where we made on Friday of 52.73. And again, that helps me confirm that if we can blow out the first higher low, technically this would be a higher low. If we can blow that out, we have room to come down to 52.16. And at the same time, 52.73 is roughly what? Eight, about, yeah, about 10 points away, basically 12 points away from that main 20-day EMA support of 52.65. Okay, good. That just helps me confirm that if we can get a close below here, all it says is as long as the daily closes below 52.65, we can short it. If the 4 hour or the daily closes back above more or less 52.73, not even above 52.65, but back above 52.73, most likely price is going to bounce. Okay, so we have these two zones identified. Let me go ahead and break this down to the 1 hour now, because again, one thing I want to do also is I want to place an alert here because we're going to be going long on a break of 53.68. A proper stop would probably be, you don't need to risk, well, I wouldn't risk too much on the S, maybe a solid, 20-point space where you have a psychological support of 53.50. And you can, again, as long as we can hold 53.68 at a minimum on the 1 hour candle, we should be able to keep on going higher. But again, in order for us to consider shorting, really get me a daily close below 52.65 and we can short to 52.64. I mean, excuse me, 5200 to 5220. We can short down there to this area here. If we end up breaking on the intraday below here before the daily even decides to close, well, simple. As long as that 1 hour candle can close below 52.73, we don't have to wait for 52.65 to close. We can take that attempt, that momentum will and can spill us over down towards our next previous higher low, which was 52.18. Okay. With that said, that's the up and down setup that we have identified on ES for now. I don't need to be going over anything higher or anything lower because what matters is the now. What is price action doing now? And in my opinion, I think this is one big old range. What looks really enticing right now, and then while I'm looking at this on the 1 hour, is the fact that we have a session high over at 53.28. We're coming right back down to it. If we break below it, my first assumption for the 1 hour candle is to come down to the 20-day, which is over at 53.21. Maybe you could go long on that dip, set your stop, 20 points below that level, and you're basically going to be targeting the retracement of these lower highs. So you'll be targeting first take profit, it would probably be 53.50 for me, and then above 53.50, you're looking at 53.68. However, the odds and the probabilities of the setup in this area here, not worth it. Unless you're really willing to take that chance here, we're not going to be doing that. We'll wait. Again, it could come down to the 20-day. That's roughly your 53.20 area. You could stab that long with a 20-point tight stop, and you're targeting at a minimum, 30 to 40 points to the upside. That's fair. That could be a 2-to-1 ratio, but we're not going to be doing that. We'll wait off a little bit on until at least Tuesday's open comes around, and we'll see. Either we'll get a break of 53.68, we're going higher, or finally we get a flush below 52.73, and we can short. To do anything here in between, to me at least, would be timing. Something I want to add on to this overview as well, and what I like to do when we have spikes up or sharp moves to the downside and we start to slowly recover it. How did I know Friday that long was going to be the signal? Well, when we usually have really aggressive drops or really aggressive rises, it's not a bad idea to draw out a Fibonacci retracement sometimes, and you would plot it from the high point to the low point, because the assumption is if we couldn't continue making lower points, most likely price action will retrace its move to the downside. So with that said, I'm just going to change up the color so it stands out, make it a little wider. Okay, I understand this looks a little messy, so first things first, let me remove this level and let's only have the fib up. All right, so we have 23.6 at 52.95. We have our 38.2 level at 53.09. We have the 50% retracement at 53.20. Fucking ironic, isn't it? The fact that I said the 20-day EMA on the 1 hour. If you have the courage, you could take that stab at biting it long and have that stop 20 points below. And again, you're targeting roughly 30, 40 points to the upside. That's a setup in itself. We won't be doing that, but I gotta point it out. And then the 61.8% retracement, which is what we're kind of breaking down right now, is 53.30, 31. Interestingly enough, 53.09 was a previous lower high when we were first trying to recover the pullback move to the upside, and 53.33 was a previous all-time high before we broke above it and we made highs of 53.68. Very interesting to note that. With that said, this Fibonacci retracement helped me get the idea that if and when we specifically can even get above the 38.2% retracement of 53.09, we'll probably get a nice squeeze and push towards the 50% retracement, get us above the 50% retracement. We're going to 61.8, and ultimately, as long as we can hold above 61.8, we should have enough strength to come up to 53.47 and basically retrace this Fibonacci retracement. With fibs, the most important thing I look out for, what I try to monitor and keep an eye on, is the 61.8, the 50, and the 38.2. The 23.6 and 78.6 are good guidance levels, but I wouldn't put too much emphasis on specifically direction around those levels. I've tend to notice it's sometimes 50-50, and the levels that are in between, I mean, those are your golden levels, because you know above or below a certain level between this selection, you know where price is going to go. It's very 50-50. It's either up or down. So again, let's see if we come down to the 50% retracement, and either we will bounce off of it, come back up to 61.8 and break out, or we're going to break below the 50% retracement, and it's going to help us begin to pull the spill down towards the 38.2% retracement, 38.09, and just so happens that the 200-day EMA for us is at 53.08. Cool. Very cool. So with that said, there's a lot going for price action that's acting as a support. There's a lot, steering me to believe that we will see higher price action, possibly even into this week. But I won't rush to say anything with certainties, because we have a few catalysts to get out of the way for this week, especially PCE. PCE is going to be a big one. We'll see what the numbers are. Ultimately, we'll see what the reaction is. No predicting. But my stance remains where we're going to go higher. Even if this does pull back to 52.73, give us that break, give us that healthy pullback down to even 5200. I'm very open to that, and I'm going to say that it's going to get bought. These downside moves, especially in a bull cycle, a bull market, they just don't last. With that said, let's take a look at NQ, and I'll try to keep NQ brief. So real quick, let me get rid of all these alerts. Okay, so same thing, daily. What do we have? 2-year. Okay. Now, with NQ, we're going to do the same thing like we did with ES. Let's identify the floor that we're in. And back in 2023, where is it? 2023, right here, right? Where we bottomed out over at 14,120 ultimately. When we got back above the point of 1670, I mean, we just never looked back. Mind you, we're currently above 18,704, which was the last high. As long as we hold it, what are the odds we don't go higher? Okay, so with that said, let's point out the floor of, oops, I had a fib mapped, 1 second. Okay, so plot it at the high, and then let's plot the floor over on the wick right here. So this is going to be our floor. We know with certainty above 1923 we're going higher. We're probably going to come up on 19250, maybe 19500 afterwards, and then below 17,102 we're probably going to spill over lower. Okay, again for illustration purposes, I'm going to make this yellow so it stands out, where I know if and when we are either above or below these levels, I know what the direction is going to be. Okay, let's note that the 20-day EMA is at 18,477, 18,500. Okay, noted. Is there anything else here in between I see that could maybe give me an idea of what's going to happen? No, not really. I got to break this down to the 4-hour. So let's take a look now. Okay, and you can see a beautiful climb, right, on NQ. We took over all our previous lower highs and we're holding flawlessly above it. Wonderful. Our 20-day, yes, our 20-day EMA on the 4-hour is at 18,840. A lot of guys are looking to possibly have price action come on down here and we pick up some buy orders and we'll end up going higher. But again, that falls into timing price action. We just went over a similar setup like that on ES. Not my cup of tea, not what we're going to do. So with that said, I'm going to go ahead and identify the next closest floor I can to the 4-hour where, where I know if we're going to get a break below that level, we're going to go lower. Now, I wanted to plot it over at 18,619, but the wick really comes up on 18,545. So I'm going to put a wick right there where, again, now I've just narrowed down what's going to happen in between the massive floor that we've identified on the higher time frame. So again, I can say with certainty above 1923, again, we can go to 19.1, 19.2, 19.250 is probably going to be my target for this week if we get that break, or get us below 18,545 and we spill on over. Maybe at most I'm considering the 20-day EMA as the support, which is over at 18,477, 18,500. Okay, get us down there and buy us back up. If we end up again closing below 18,477 on the daily, that's the same thing as ES closing below 52.65 for me on the daily. Means we'll most likely see more downside, and the most reasonable targets to continue targeting to the downside would be the next higher low. In this case, get a break of 18,477. That daily candle closes below it. We can begin targeting as low as 18,200, 18,167 would be a fair area of target. We'll get there when we get there. We'll see kind of, what unfolds. But with that said, let me for now set an alert over at, I'll do it over at 19,000. So it gives me enough time to be ready for a signal. 19,000, yep. And then let's go ahead and place an alert right here. I'll go ahead and place it at 18,550. Okay. Okay. So we have the setup kind of identified for the most part. And again, this makes sense. This is the first higher low we'll need to blow out. The second higher low we get rid of, which is 18,500. 545, and we can begin targeting the next higher low, which is roughly on the smaller side, 18,400, 18,390. Below 18,400, 18,390, we're probably, I would say, the areas of 18,160 to 18,200 would be a fair area to fall back down to. Again, that gets blown out, we're probably going to start revisiting 1870, 18,1. 18,000 was a very important level, but everything that we just went through the last month or two, I think, there's absolutely no reason for more downside. I don't have the reasoning for it. Everything is kind of pointing to the upside, and the fact that I'm seeing chatter where people are getting ready to short, cool. That's a good perspective to have. Again, I'm not gonna ignore the possibilities and the scenarios to the downside. I'm very open to that, but just historically and the way we've seen these patterns kind of unfold, I say there's room to go higher. The fact is, this is a bull market, and what boggles my mind, what I'm going to leave this off with, is 49% of Americans think that the S&P 500 was red for this year. It's a pretty mind-boggling statistic considering we're making new all-time highs almost weekly at this point. Well, with that said, that's what we're looking at on the overview. I hope you have a great, solid trading week ahead. We'll need to see specifically PCE for the catalyst for direction. It's going to be a short week, but maybe we see a fair amount of volume pickup, and we'll make it a good week. With that said, have a great trading week ahead, and I'll catch you on the next one. Cheers.